Now, Nigeria plans to shut down the bank accounts of companies smuggling goods on the FX restriction list. Will take the pulse of the investment environment in Nigeria in the second quarter with Kayode, Akindele, a partner at TIA Capital, and Tilewa Adebajo, the CEO of CFG Advisory, and they join me to discuss this and the inflation figures as they come out. We'll be watching out to see those figures when they're out. But thank you so much for joining me on the show, sirs. I'll first start with looking at the second quarter. We saw the first quarter was more or less all about the elections, but in the second quarter, we've seen quite a number of things happen in this second quarter. We've had an inauguration, we had the president coming to power, we have a new National Assembly, we've had quite a series of issues around geopolitical tensions, around the world. We've seen what has been happening to oil prices. And putting all that in perspective, I'd just like to first let me get to your thoughts, Kayode, on the operating environment and how you think the second quarter has shaped up.
Well, compared to the first quarter was really about the elections. And now that's, except for the election tribunals, that's been put to bed. So now you have a situation where everyone's looking at what the makeup of the government is going to be, what policy direction we're going to look at going forward, and whether it's going to be the same as the last 4 years or whether it's going to be a new direction. So I think that's key. And the government has got their National Assembly leaders they wanted. So it seems that the executive and legislature will have a better relationship going forward. It has to say about ministers and policy direction going forward.
Tilewa?
Well, I think there's been a lot of uncertainty that the elections have created for about a year now in Nigeria. And I think we're beginning to see the impact on the growth of our economy. And I think, as Kayode has mentioned, it's important that the government begins to put its ministers and its policy direction in place. We know they've retained the central bank governor, and we know basically what he's been doing for the last 4 years. And if he's going to continue along that path, I think it's important that we know. But overall, I think it's important that we need to look more at the fiscal policy, which is really what has been slowing down the economy, in the sense that government is spending close to 60% of its revenues to service debt. So policy direction, I think, is very, very important to stimulate growth, because growth at 2% does not cut it for the Nigerian economy.
All right, Kayode, let me bring you in this, because on one hand, you say we need the president to bring out this list and announce the ministers, but when you look at it from a process perspective, do you think it's also has to do with the process and why we have not gotten this? We saw what happened in South Africa. The president won the elections, and then in less than a month, he's announcing his cabinet, and they've actually even forgotten about that. Everybody's gone to work. In Nigeria, on the other hand, we had to wait for the new Senate to come in place, because even if the president puts out the list of the ministers in there, they will still have to go through the process of screening at the National Assembly. So is it more or less a process delay, or the fact that we still haven't gotten the names out?
Yeah, we run a different process from South Africa, which has a kind of semi-parliamentary system. So it's quite easy to launch your ministers almost immediately, and we had to wait for National Assembly. But that's been done now. So we're in a process where the Senate has gone to recess for 2 weeks. In that period, we expect to see that minister list released, so that when they come back from recess, that's one of the first things they do. We need to have ministers in place. There's a lot of policy things we need to look at. What's happening in the geopolitical realm, especially in regards to oil, things to do with African free trade. There are various other things. We need ministers in place and policy to start from the start. We can't afford another long period of ineffective governance while we wait for that to happen. And even some of the appointments that don't need Senate approval, chief of staff, media aid, those have not been declared so far. Secretary SGF, Secretary of the Government, those can all be announced without Senate, and those are not being announced yet. But we need to those things to be announced before the end of June so we can start moving.
All right, now let's look at how the government has been going about, or his plans to go about, looking at getting investment into the country. But then on one hand, we're looking at the news I read earlier about, shutting down bank accounts of, companies or firms that, are flouting the FX restriction, that are smuggling goods into the country. Tila, is that the right next direction?
Obviously, evidently not, because that's more or less you bringing in double jeopardy. First of all, structurally, the economy is not sound. It's not growing. So if you're in a low-growth economy and the policies are not right to stimulate foreign direct investments, you shouldn't be doing things like this, and also with the MTN situation, to begin to come out with the perception of being an anti-investment type of government. To be able to, there's a lot of work that this government, in fairness to them, have done on the ease of doing business to make the business environment more friendly. But if you're doing that on one hand, and your body language on the other hand is being very aggressive towards companies without due process, then you begin to see these problems. In 2012, for instance, FDIs into Nigeria was 8.5 billion US dollars, a high. Today, I think we're struggling with about 2 billion. And I think that in itself is a problem. And it's at a time when we need this critical foreign direct investment. So once again, it's important that the government should signify its business policy. Kayode mentioned earlier about the Africa Free Trade Zone policies that we need to sign up on to show that as Nigeria we're taking the lead and we're interested in attracting foreign direct investments into the country. Portfolio side is also the same. A lot of the foreign portfolio investors have also left the Nigerian market.
Kayode, do you share the same sentiments?
To a degree. I think the first thing is that there needs to be an environment for all investment, both domestic and foreign. If Nigerians are not investing in their own economy, why would foreigners? So we need to address the situation that the economy as it stands for, and some of the stances of some of the regulators has made it inimical for investors, both local and foreign, to actually invest. And we need to address that from a wholesome point of view. I think secondly, we need to look at what sort of investment do we want in Nigeria. And I think that's where we have policy comes into line. We have to look at the right type of investment and for the right type of investors. We've had so many situations where we have so-called investors coming in and it's not really the investment that we need. And I think we need to address that. I think Nigerian Export Promotion Council started tracking all these MOUs and trying to get the data to say, okay, you had an MOU signed, how you get from MOU to actual investment on the ground. I think that is a step in the right direction. But I also think the regulators, we don't want a Nigeria that's not regulated. We want investors, they have to be through the regulation. And you have a situation where if people are not going against the regulators, it affects the sustainability of our economy and also the health of a lot of our people. And it's also for security reasons. And the regulators have to be more, I think regulators have been quite aggressive, but I think they also have to be more, have to work more together. You have a situation where there are 5 different tax inquiries by 5 different agencies. If it's a tax inquiry, work together, do it as one. If it's an anti-competition, do it as one. And let's be more joined up. But I think, look, our regulators have to step up because for a long time, a lot of businesses are getting away without proper regulation. But it has to be done in a way that's sustainable and helps the economy.
All right, Till, I want to go into the area of human capital. You know, interesting when you listen to the president's speech, you know, on June 12th, and you hear comments around him trying to get about, talking about getting about 100 million Nigerians out of poverty. We're seeing what is happening with Nigerians, you know, and the brain drain that is happening with Nigerians leaving the shores of the country. In your view as an economist, and looking at this and how we position for the future, how best should we tackle this, getting 100 million Nigerians out of poverty, if that's possible at all?
Well, I think what is important for me is that this is the first time this government is admitting the fact that the economy is not growing as fast as our population growth has pushed a lot of Nigerians into poverty. And I think the whole essence of Nigeria being the poverty capital of the world, I think that admission by the president, I think, is very important. So the question now is that what do we do about it? You need to grow your economy by 8% per annum. It's very simple. If you do that, then you're able to lift most of those people out of poverty. So it's a trade-off. If you're not growing your economy, then your people will be in poverty. If you're growing your economy at 8%, 9% per annum on a sustainable basis, then you lift all those people out of poverty. Then people can begin to make investments. You can begin to provide social infrastructure. You need to look at the university curriculum to make sure it's relevant to the future in terms of you're looking at e-commerce is dominating the world. You're looking at different need for education systems, and the children of the future are going to be doing something completely different. We need to make our educational curriculum relevant because one of the assets of this country, as you said, is the large human capital resource. And at the end of the day, we're exporting this capital resource. And it's the Nigerian diaspora abroad who are leaving this country that are remitting close to $25 billion a year back into this economy also. So it's the strength of our human capital that is actually still sustaining this economy, and we need to continue to develop it.
All right, then. Just coming in now, we've seen the inflation figures are out. According to the National Bureau of Statistics, we're seeing May inflation coming in at 11.40% year on year from 11.37%. Kayode, looking at these figures, another uptick?
Yeah, I think it's expected, which is a period where seasonally the food prices go up because of out of harvest prices. So it's expected. I think if you look at it from overall, we've used a situation where inflation has come down from about 18% down to this around sticky around 11.5% odd over the last 2 or 3 years. I think we reached a plateau where from now on to actually drive inflation downwards, we need structural reforms. The inflation we have now, once you reach about 10.5%, is structural. And unless we have serious reforms in the economy, in regards to transportation, policy, and various other things, you're not going to get it down to single digits, irrespective of what. And the very tight monetary policy you've done has got us this far. Now we have to move to fiscal, and then to get it down to single digits. I think that is the clarion call to our policymakers.
Tilewa?
Yeah, I think I agree with him, and 100% on that. And I think these are the challenges that the policy direction of this new government has to determine. The tight monetary policy is not helping growth, which is really what we need. And in addition to what he said, even if we're not getting it down to single digits, if you take a look at the inflationary figures, for instance, it's mostly what type of inflation do we have prominent in Nigeria? Is it demand pull or cost push? It's mostly cost push inflation. And it's mostly food prices. If you take a look at all the other levels of inflation, it's only food prices that is in double digits. Every other indicator, services, in terms of food, in terms of housing, tobacco, hotel, all those inflationary figures are all in single digit. Food price inflation is now about 13%, down from a high of 22. In the last 20 years, inflation has averaged in Nigeria just about 12.45%. So the average inflation in Nigeria anyway is 12.45%. But what is also important is that in doing some analysis coming on the program, in 2011, Nigeria had one of the highest growth rates, which was about 8.5% GDP growth. Inflation at that point in time was 12%. So the essence of the fact that inflation has, from the data available, the level of inflation that we have now should be able to sustain at least an 8% growth. We've done it before. And I think I allude to what Kayode has said, that it's now no longer about monetary policy, or you need to go into a structural reform to be able to free up the economy and achieve the growth. You're not going to, we can't continue to tighten up, we need to open up. We are looking for even the demand pull inflation. We need consumers to start spending. So let's get that demand pull inflation, and let's get demand type of inflation. We need that to be able to grow the economy. So I agree with him 100% that yes, it's no longer looking at these inflationary figures. We need structural reform that will give us 8% growth. And we've done it before. Like I said, in 2011, 8.5% growth, inflation was at 12%. We can do it again.
All right, then I'll just look back at what the recent reports from Fitch, and what we're talking about the economy, because we're talking about growing the economy on one hand, and we're also talking about getting investments in to drive growth for the economy. They're talking about the fact that they're rating us at a B+, stable outlook, and then they're saying that the economy will continue to experience sluggish recovery. And we're looking at economic growth. We're looking at Q1, we saw the economy came at 2.01%. Your take on what to expect from Q2, bearing the fact that we've seen all these events and all these activities happening in the second quarter?
I don't think the Q2 growth figure is going to be any much more than the Q1, to be honest with you. There's been no triggers to suggest that there's going to be anything then. I think what the government has to work to is, look, let's start moving towards getting Q3, Q4 moving. And in that sense, let's start announcing some real reforms. We need reforms in our whole sector. The government has said that for the past 3 years. Nothing has happened. PIB has been broken up into different parts, tried to sign piecemeal, it's not been signed. You want to discuss the fiscal opportunities in oil and gas with the oil majors, especially offshore. Let's get that done so people can start investing. It's a 7-10 year investment horizon. Let's start looking at what is inheriting small SMEs especially. Ease of doing business has been a great media pool for the government. And there have been some improvements, but not enough. You still go to the airport, you still have issues with customs, you still have issues with immigration, you still have issues with all this. You still have issues with the infrastructure in the airport. They've done the airport road, that's great. But we need to do more stuff. We need to do more. We have to do more in the LinkedIn. It's not about graphs. It's about every day I'm running a business on a day-to-day. I'm not having 7 local governments with 80 different taxes coming to come and stop me over things that don't make sense. And I think until we start doing that more effectively, we're not going to have the growth. Because I agree with what said about growth of 8.5%. We had high growth, but was it inclusive growth? Because the problem we have sometimes is that we look at growth and we look at a per capita basis. Yes, you have a high growth, you have a high economy, then you divide it by 200 million people and you say per capita income has moved from 3,000 to 7,000. But for the general mass of people on the streets, that doesn't make a difference. They're not seeing that growth. You have a small middle class that's going very, and an elite that's taking that growth and going. But we want to have more exclusive. And that's why things like, when you talk about human capital, things like, if you look at all research, for children, the greatest part of where their brain expands and they learn the most is between the ages of 2 to 5. That's what things like school feeding come into expect. All that that's not even federal government, that's state government. But all those things we have to start addressing if we want to have proper inclusive growth.
All right then, so more to be done for inclusive growth. Thank you so much on the show today. I've been speaking to Kayode Akindele, he's a partner at TIA Capital, and also Tilewa Adebajo, he's the CEO of CMG Advisory.